In the next 60 days, fortune would be made and lost in Australian property market. And Australian property market has just exploded with unprecedented activity and competition. A massive government policy change is happening in just a few weeks that would flood the market with thousands of new government-backed buyers.
Mortgage insurance. You need it, but it adds tens of thousands of dollars to your home loan. From October, we're making it easy to buy your first home with just a 5% deposit. You don't have to pay a single dollar in mortgage insurance. That's because we'll cover it, because we want you to buy your first home sooner.
And today, I'm going to reveal exact strategies that you need to win the properties before this policy change creates even more competition. Right now, Australia's property market is experiencing the most competitive spring season that we have seen over a decade. Melbourne has 1,184 auctions last weekend alone, which represents the highest volume in 15 weeks. Sydney hit 69% clearance rates, showing strong buyer demand, and Brisbane houses have just smashed through the $1 million median price barrier for the first time in history. Now, this is not a typical spring season bouncing every year. This is an exceptional market surge driven by multiple powerful factors. The first home buyers guarantee scheme is expanding more dramatically than most people actually realize. Property prices limits have jumped to 1.5 million in Sydney, 1 million in Brisbane, and no caps in Melbourne. The deposit requirements remains at 5% with no lender's mortgage insurance required. What this means in practical terms is a massive wave of government-backed buyers with serious purchasing power that they're about to hit the market in your price range. When you add 75 basis point interest rate cuts, which you've already seen coming through, the buyer confidence and the borrowing capacity both have increased quite significantly. Now, when you combine all of these factors, you're looking at the perfect storm of competition. The problem is most buyers are walking into this highly competitive environment completely unprepared for what they're about to face. But that's not going to be you, because today you're going to get complete playbook that successful buyers are using right now. So let's talk about actionable strategies. The first strategy is mastering your preparation. You need an unconditional approval, which is not conditional and is not just system generated approval. This requires a full assessment where the lender has verified each and every aspect of your financial position. The reason this matters so much is simple. At property auctions, you cannot include any conditions in your purchase. The moment the auctioneer's hammers fall, you are legally owning that property and there is no way to back out. Your preparation checklist has 4 essential items that you must complete before that first auction day. Firstly, of course, get the unconditional pre-approval from your lender. Second, order a professional property valuation. Now, this can cost between $600 to $800, and sometimes the bank can do a valuation of the property even before you have signed the contracts. Third, complete all legal inspections and due diligence. And fourth, have your 10% deposit check or cash ready to be transferred immediately. In this current market environment, you need the budget for 5 to 10% above your initial research value, because the competition is driving prices higher than expected. The buyers who are prepared thoroughly are the ones who are going to win the properties at reasonable prices rather than the emotions driving them. Now, the second strategy involves understanding the timing, and this is absolutely crucial for your success in the next few months. If you're not a first home buyer and you have a budget between 1 to 1.5 million, you need to listen very carefully to this advice. You should act and purchase before 1st of October to avoid the increased competition that's coming. So how do you time this? Now, let's talk about the timing and why it's important. After 1st of October, you'll be competing directly against highly motivated first-home buyers who have government backing in your exact price range.
More young Australians will be able to get the keys to their first home quicker.
Properties that are currently guided at 1.3 million would grow to 1.4 million quite quickly, because they would be attracted by the expanded first home buyers market. Now, if you're a first home buyer who benefit from these expanded schemes, you should do exactly the opposite. Here is a practical example. In Brisbane, you can now purchase $1 million home with just $50,000 deposit under the new scheme. This approach could save you 10 years of deposit saving plus $42,000 in lender's mortgage costs alone. Understanding and using this timing strategy correctly will give you a significant advantage over other buyers in the market. The third strategy focuses on understanding and using auction psychology to your advantage, because psychology is everything when it comes to property auctions. The first psychological rule you must follow is this: do not start the bidding until the property officially goes on the market. A property goes on the market when the bidding reaches the vendor's reserve price and the auctioneer announces this fact. When you do decide to enter the bidding, you must bid with strength and you must bid quickly without hesitation. Hesitant bidding behavior sends a clear message to everyone present that you are approaching your financial limit. You should maintain consistent bidding increments of $5,000 to $10,000 or $25,000 depending on the property price level. Never reduce your bidding increments during an auction because this signals financial weakness to your competitors. Your physical position should be front and center when everyone can see you. You must respond quickly to rival bids to maintain the auction momentum and project unstoppable confidence to discourage other bidders. Strategy 4. Now, this is for more experienced buyers. There is an advanced tactic called the sniper bid that can be very effective. The sniper bid strategy involves staying completely silent throughout the auction until the auctioneer makes the final call, then entering with a strong bid. If you decide to attempt the sniper bid strategy, you must position yourself visible in the crowd and bid loudly and clearly to avoid any mistiming. Regardless of which bidding strategy you choose, you must set your absolute maximum price before you arrive at the auction venue. Property auctions are specifically designed to create excitement and emotional pressures that pushes buyers beyond their comfort zones. You offering 7 to 10 days instead of 21 to 30 days that most buyers could offer means nothing when the auction comes. This strategy can help you win properties even when competing against higher cash offers because sellers value certainty and quicker settlements. You should consider approaching multiple lenders because the government is encouraging small banks and credit unions to participate in this particular guarantee and this scheme. These small lenders often offer better rates, faster processing times than the major banks. And if you work in certain professions like medicine, you may already have access to 5% deposit loans. So you should use this advantage immediately rather than waiting for this deposit scheme to come through. Let me show you how exactly these strategies work in practice by comparing two different buyers who have approached the same market with completely different results. I want you to meet Sarah and Michael, two buyers who are looking in the same area with similar budget. Now, both buyers wanted 3-bedroom townhouses in Melbourne Inner East. Both had a maximum budget of $1.2 million to spend. Sarah's approach included 3-step preparation. She attended 15 different auctions to understand the market dynamics. She obtained the unconditional pre-approval from her lender with all the documents verified. She ordered a property valuations that showed that the property that she is buying is worth about $1.5 million. And on auction day, Sarah positioned herself confidently in front of the crowd where everyone could see her professional appearance. The property went on the market at $1.1 million, which was when Sarah entered into the bidding, grabbing this property at $1.2 million. She maintained strong $10,000 increment throughout the auction and responded quickly to every rival bid. Now, Sarah's maximum budget was $1.19 million, but she got this property at a decent price. Now, on the flip side, Michael made 3 critical mistakes in his approach. He only obtained conditional pre-approval instead of unconditional pre-approval. He attended just 2 auctions before bidding. He never ordered a professional valuation to understand what true property's worth was. At a similar auction for a similar type property, Michael starts bidding in early, which helped push the price up from an opening bid of $900,000. Because he started the bidding early, the momentum created quite effectively. Michael became emotionally invested in winning the property. When the pressure increased, he started reducing his bid from $20,000 to $10,000 to $5,000 to $2,000 to $1,000. Everyone at the auction could see that Michael was approaching his financial limit, and based on his body language and the bidding behavior, it was very evident. A more confident bidder entered the auction late and won the property at 1.18 million, which was actually what Michael could have afforded if he would have followed the strategies. Now, both buyers were in a same market with same budget, but the different level of preparation led to a completely different outcome. Sarah understood the psychology of auctions and prepared thoroughly, whereas Michael got caught up in emotions and made strategic mistakes. Now, this example demonstrates that preparation and strategy beats panic and emotion every single time in a competitive market. Here are the 5 deadly mistakes I see buyers can make constantly that would cost you property and money. Mistake number 1. Mistake number 1 is relying on conditional pre-approvals instead of unconditional pre-approval. You must get unconditional pre-approval or don't bid at the auctions at all, because conditional approvals will not protect you legally. Mistake number 2 is bidding before the property officially goes on the market. When you do this, you are just helping the seller inflate the price without any guarantee that you would actually buy the property. Mistake number 3 is not having a firm maximum walkaway price set before you arrive at the auctions. Property auctions are specifically designed to create excitement and pressure and emotional turmoil that makes you overpay beyond your means. And mistake number 4 is poor physical positioning and unprofessional presentation in auctions. When you look uncertain or unprepared, experienced competitors or buyer's agents will immediately recognize that you are weak. And mistake number 5 is completely ignoring the October timing considerations that are explained earlier. This policy change is real and is going to transform the market, so you must plan your strategy accordingly. If you avoid these mistakes, you will be ahead of 80% of the other buyers competing in the market today. Now it's time for you to go out there and win these auctions with these proven investment strategies. Take care, stay calm, keep smiling, keep investing. This is Mox checking out. Adios.